Hello, this is Naeem Aslam. I'm back with an update of coronavirus and its influence on financial markets. So let's begin by looking at the current infection rates and unfortunately the death rates. The silver lining is that we have seen 2 consecutive days of less people dying because of the coronavirus. And this points out to this particular fact that perhaps Italy has already reached its peak, that the infection rate and the death rate that has already reached its peak. And if that is the case, then that is a positive sign for the markets. And I think it was because of this particular optimism that we were seeing some sort of a surge in the equity markets, in the European equity markets specifically earlier this morning. But now we're seeing those surge, we're seeing that momentum to a large extent easing off, and the markets have started to derail, and it has started to continue its journey to the downside, which very much echoes what happened over in Asia. Because if you look at the markets, the equity markets specifically over in Asia, they were pretty much flat or they were down. And this is despite the fact that the PBOC, the People Bank of China, has once again introduced this massive bazooka, this massive liquidity package for the banks in order to ease those liquidity concerns. But I think something which traders really need to focus with respect to coronavirus and its influence on financial markets is the move in the oil industry, because crude oil, WTI, is sitting at 18 years low. You know, we have seen the prices for crude oil touching that $20 mark before, but now, as of today, the price actually went below that $20. It went all the way to 19.93 or 19.91, in around that mark. So this leads me to believe, you know, the big support level from the weekly chart, which is running between $17 to $19, is coming into play. And if that is the case, then we should see some sort of bounce once again for crude price, because that double bottom would be forming, which we all know it's a very well known as a bullish pattern. So if that comes into play, we should see the move to the upside. But on the fundamental side, we really want the demand shock caused by coronavirus to ease off. So that means, you know, the lockdown situation which is currently in place, that should ease off to some extent. We should see life returning back to normality so that we can see that demand picking up. That's all for today. See you guys tomorrow.